Hello friends, I'm your friend Ish Taneja, and I'm going to talk about how do we do the CMA from Takshila Learning and Orbit Institutes. I am your faculty for this part, the first part. So basically when you are studying at home, you will see some study materials which will have certain important things which are defined on your left hand side or on the right hand side. You need to understand them because they will have a significant meaning. So when you have this, it means the key formula. What does this mean? Basically, this formula has to be remembered by you because basis that only you should be able to do those certain technical questions, certain questions which require you to do a calculation using this formula tips. These are tips which are highlighted with book, which means that you probably need to do more research onto them. Knowledge checks, which means that these are the memorizers, you need to memorize them. And practice questions, basically that it is a question for you, so you should practice it more. These are important for your understanding. Although you will get a lot of test questions in your bank, and my advice is do keep on doing them on a frequent basis because ultimately your success is dependent more on the questions which you do. More practice you do, more is your success rate. Less practice you do, less is your success rate. So be assured onto that part. And these are the sites which are available to you. Once you generate your login IDs and you can get these questions. Now I'm your friend for topic 1, which basically covers the financial statements, which means a company when they prepare their books, what are the financial statements they are required to prepare. So a person from India or maybe Nepal will talk about 3 to 4 things which have been there from the day one. So many years we have been preparing. One of them is, of course, the first is balance sheet. The first is the balance sheet. That's everywhere in the world. But some of the countries they name it as statement of financial position also. So that's the one important. The second is the income statement. In India, generally we have been saying this as a statement of profit and loss because profit and loss is word which is more used by us in India, but abroad in US people don't mention this as a profit and loss statement, they say it's an income statement. The third is the cash flow. That's a statement which is prepared all over the world. However, now there is one more statement which is a part of the financials only, which is shortly known as a statement of changes in equity or SOCIE. Some people say SOCI, some people say SOCI, some people may say SOCIE. So everybody will say differently, but then it is one of the new statement which has recently come up in India also, which companies are required to prepare as a part of financial statement. So this is the fourth important statement. Other than this, we will see also the limitations and who are the users of the financial statements. So coming back, what is an income statement? It's basically talking about the profit and loss. Of course, that's what it is. It measures the gain over a time period, which means it is not on a specific date, it is over a period of time. You can measure profitability because from your revenues you minus your expense, what you get is your profit or losses. Entities valuation, this is very important because nowadays valuation is also an important criteria. Now for measuring the value of a company we use these statements because the first thing which is important is the cash flows which the organization is generating, and these cash flows are taken from the income statement only. How much business the organization is able to convert into cash, and that cash has to be used for valuation purposes. So what you have is your revenues. Similarly, you can do a creditworthiness, whether I should give a credit to this organization or not, whether the organization deserves that credit or not, is all measured from income statement. So what you have is revenue and gains. Similarly, the expenses and the losses. So RE is first part, which is gross, and GL is second part, which is the net. So first two are gross, which is operating, and gains and losses are the net non-operating part, and the other comprehensive income, which is also called as the O, the C, and the I part. There are two steps format which are prepared. One is single step and one is the multiple steps. Single step, what you have is just one simple statement. So what you have is revenue, you have expenses, you have gains and loss in between, and what you get is a net profit. From an analytical perspective, you will not be able to do much analysis. If I have to find out how much is the gross profit, how much is the operating profit, probably no. You will not get much, and then you have to use your calculator to take one, take two, and so on. So, practically speaking, single step format is the least used, least made financial statement. What is made is the multiple step format, which is more commonly used format. So, for example, this is one example. You have sales, you have dividend, you have rentals. So this is basically non-operating, but still it is coming here. So from here you have all these expenses. Basis this you have net profit, and you divide by the number of shares. This is the EPS, you get a per earning share. This moves into the SOCIE. So this is single step, doesn't give much value. But if you look into a multiple step, so you will see here the gross revenues, your net, then how much was the closing inventory, how much was the opening inventory, how much is the gross profit, okay. Then it tells you how much are the SAG expenses, how much are the non-operating incomes, plus how much is the tax, how much is the net income. This is the same as what you could see there, but then you have all those details which helps you to do a comparison, do an analysis much better. And similarly the earning per share, which is derived here. Now, one of the important things which is there as far as the income is concerned, some of the businesses may have income from discontinued operations. Now, what are discontinued operations? Basically, discontinued operations are those operations where the business has stopped. So there is no longer any kind of continuity as far as those businesses, those sub-segments are concerned. Those are shown separately, and there is only one line to that. So whatever is the net income or loss from that is shown here. So if you see here, this entire sheet has all things continuing from continuing operations, and just a one single line from discontinued operations, and the sum is the net income. That is how the importance of discontinued operations is there in the part of P&L. Okay, so one basic question for you, which will be a part and with the exception of, so something which is not there. So when we prepare a multiple step gross profit, yes, we could see that. Selling expenses, we could see that. Interest expenses, probably no, because this was netted off, so this is not there. This what we did was net off. COGS, yes. So ideally answer should be in the interest expense, because this is something which is not there. Moving on, this is a new statement which has been brought in. Again, I said it is because of the IFRS, the IAS 1 which is brought in. It is also called as the SOCIE or SOCI or whatever people use it. It's basically the objective of the statement is for the calculation of net worth of the organization. So it includes, what it includes? It includes the capital stock, which is the shares. It includes the APIC, Now this statement is not there as far as India is concerned. This is basically the share money which you have to issue these shares. So these are the share application monies, anything convertibles, future options. So these are something where the money would have come and those are to be converted into the share capital. The retained earnings, which is so you have to see some different terms. In India, we will not use this term, the APIC. These are like your share application money or your futures, derivatives, employee stocks, vesting is to be done. Retained earnings we don't use, we use the word reserve and surplus. Accumulated other comprehensive income, this is again a new term which is not used much in India. And treasury stock. Again, treasury stock in India are not there. Companies Act in India have deleted this concept. So treasury stocks basically concept is that a stock which the company has bought their own shares back. So when a company buys shares from the market, they are termed as treasury stock, and those the companies have retained. In India, the Companies Act do not allow this, and whatever shares the company buy have to be cancelled. Whereas in US, you are allowed to have treasury stocks. So there is a beginning balance, whatever are the additions, deductions, and the ending balance. Now, so this is it. So these are the stocks in case they have issued further shares. So opening plus additions. These are the APIC, of which how many are converted. This is the closing balance. Retained earnings, how much income, how many dividends. This is the remaining balance, and the sum of all these are total here. So this total practically sum of 1, 2, 3 it goes to the balance sheet. That is how the SOCI is prepared. Thank you and happy learning from Takshila.